joined by one of the top speakers, in fact, from Australia, Shane Oliver, Head of Investment Strategy, also, in fact, Chief Economist at AMP Capital Investors. Very experienced here to Shane, thanks for joining us this Tuesday morning, rather. I must ask you, first of all, how you interpret this European contagion, the latest, the French election result, the Greek sort of implosion, if you like. How are investors across Asia and Australasia interpreting that?
Well, you'd have to say investors are somewhat confused by the reaction of the last 2 days. I think the falls we saw yesterday were partly due to the non-farm payrolls result in the US and partly, of course, due to the news on the elections. And there was anticipation that we'd see sharp falls in European markets. I think in the event of the two results in Europe, the French one is seen as a relatively mild one, and I think there's a general feeling there that the changes under the new leadership in France probably won't be that radical. And that's why ultimately European markets ended up flat, in some cases slightly up. And I think markets are also taking the view that a slight easing in the pace of fiscal austerity and a bit more focus on growth may not be such a bad thing. In fact, I think it's probably a good thing. The wild card in all of this, of course, is Greece, where they're yet to form a new government. It's unclear as to how that new government, whether it can be formed and whether it will agree to the or want renegotiation of the bailout terms. I think Greece is in a real bind here, because if Greece decides to reject the EU IMF bailout agreement they've already agreed to, the situation in Greece will get radically worse, because they won't get any more funding and they'll have to implement far more fiscal austerity than is currently the case. So I think at the end of the day Greece will come back into the fold, but we could go through a rougher patch in regards to Greece. But at least I think markets seem to be somewhat more level-headed regarding France.
Shane, how do you advise investors in this very volatile time of the markets?
Well, I think the reality is that we had great gains through the early part of the year, through the March quarter, and it was inevitable that sooner or later we were going to hit an air pocket, and of course that's what we've done over the last month. Global shares came off through April, European shares in particular, and we've certainly hit that air pocket. Of course, investors are thinking, well, it's going to be a rerun of 2010 or 2011, where markets fell sharply starting in May, going out over the next few months. I think that risk is certainly there. We could come off a bit further over the next few months, given the resumption of concerns about Europe and, of course, the double dip, the softer patch of data we're seeing coming out of the US. But by the same token, I don't think we're going to see the 15 to 20% falls that we saw in 2010 or 2011 from this point. We are seeing global monetary easing. Monetary conditions globally are a lot easier. The Chinese share market, I think, was remarkable for its resilience yesterday. It was unchanged, whereas the rest of Asia collapsed, which tells me that the Chinese A-share market's looking a lot healthier. This time in 2010 and 2011 it was falling. So the fact that China is easing, their economy looks like it's going to have a soft landing, I think that's a positive. And also share market valuations today are somewhat more attractive than they were this time a year ago. All of those things suggest that, yes, this correction could go on for a bit longer, but I think it's also would be a buying opportunity, because I see the global recovery continuing, and ultimately with shares cheap and the possibility of more stimulus being applied globally, I think that should mean that by year end markets will be a lot higher than they are at the moment, even though we might go through a bit of a rough patch.
Big week for China, obviously, on the economic front. Inflation data out, or PPI, retail sales, etc. But obviously a big day today, closer to home for you. Australian Budget Day, Wayne Swan's 5th. What are you expecting? What do you want to see, and what should he be delivering to Australia today?
Well, I think this budget is all about returning to surplus, and I think at the end of the day that's a good thing. For the last 2 years the government has promised to get back into surplus for 2012-2013, in other words the next financial year, and I think that's what they're going to announce, a surplus to the tune of about $1 to $2 billion. At the end of the day, that's a pretty good outcome in a world where most countries, virtually all countries, are struggling to get their deficits under control, and I think that will help reinforce confidence in Australia. But I think the trick for the government is to do it in a way that doesn't exert significant downwards pressure on the economy. So the reality is there will be more fiscal tightening, but it looks like the bulk of that will be focused on high income earners or large companies, defence, public service and so on. and low to middle income earners might actually get a bit of a handout. So my feeling is that yes, it will exert downwards pressure on the economy, but it will, the return to surplus I think will improve, well, it further enhance Australia's standing on the part of international investors. And I think the other aspect is that return to surplus and the further austerity that will be occurring in Australia will make room for further interest rate cuts in Australia. So what we're seeing come out of this is a great shift in policy settings in Australia. The fiscal lever is being turned towards austerity as we move towards a surplus, whereas the monetary lever is being turned towards easing. And I think that combination is probably an appropriate one at the current point in time. It might also take a little bit of pressure off the Australian dollar, which parts of the Australian economy would probably welcome.
Thank you for joining us there, Shane Oliver. There, you can't really escape austerity in this day and age. Thanks for that. Shane Oliver there from AMP Investors joining us from Sydney on Australian budget day.